Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello, everyone. Thanks for joining us. This is Beau Eckstein, and glad you could join us on this Thursday evening. This week went really fast for me, but I'm testing different times where we put on our meetups and things like that. I know during the summer people are out and about, so we're definitely going to do all different times during the day and different days. Just kind of test when you guys want to watch these, but you guys will also be able to watch these inside the Facebook group later on. They stay there. And then we also put this up on the podcast afterwards. So you guys should go to investorfinancingpodcast.com to watch all the previous episodes we've done. And we're going to continue to do more and more over the next weeks and months. Today, we have a very special guest. And what I like about his story is he's the average guy, a military guy, well, not the average military guy, flew in 600 combat flights, but, I could relate to his story because he was never making a lot of money early off, but was able to budget. And, over time, he was able to compound his efforts and build an impressive portfolio. And now he is retired from military, but he's also he flies corporate flights still, right? He's a pilot still, and he has a nice portfolio which is very under leveraged. Pretty much most of his assets are free and clear, so he doesn't need that many assets to live a great life. And I like that too, because a lot of us out there, everybody's talking about scaling. Well, here's a gentleman that did this, did it in a way where it was manageable. And I think it's going to be great to hear his story. And also what I like about his story is that a good portion of his portfolio are vacation rentals. And I know my friend, if he's out there listening, he's been wanting to buy a rental property in Tahoe. So this might be a great episode for you, Eric, if you're listening. If not now, I know you'll watch it later. But Larry, why don't you kind of give us a background of, where you started, your background, getting into the military, and then, the turning point of why you got into real estate, and then we'll dive into some additional questions.
Perfect. Hey, thanks a lot. Thanks, guys. And Beau, it's great to be with you. It's an interesting story. I'll be all over the map, but I'll try to make it concise. Just today, I got a call from a buddy of mine who lives up in Tahoe. He's an airline pilot like I am. We both fly for United, and they just announced they're going to lay off probably 4,500 pilots. So I'll be on that list. And, I tell you, just when I look at the Facebook feed from my friends that are all airline guys, it's devastating. A lot of them never expected this to happen, and a lot of them are going to be in some serious financial problem. And I feel for them, but I knew this was going to come at some point. So I had always prepared my life just for that, for the time when you get that call, it says, hey, your dream job is gone, at least for a while. So I want you to remember that when I tell you the story, because everything what I did was always based on trying to be prepared for that. Okay. I was born and raised in Switzerland. So pardon my accent. If you hear it, sometimes guys will make fun of it, and that's all right. As a kid in Switzerland, at the age of 11, they make you take a bunch of tests, and basically at that point, they determine what you're going to do. And anyway, I didn't do so well. They sent me to VOTEC school, and basically I was going to be a baker or a welder. That was the track I was going in. Now, I always loved airplanes. I'd watch airplanes. I studied them, and I was devastated. And thank God my dad, he was an American citizen, and he said, you know what, let's give the kid another chance. So we came to the U.S., and it was like starting all over. It's a big reset button. I loved it here. I loved the opportunity, just the fact that teachers would work with you, and everything changed. I was a straight A student and had a great time in middle school and high school. I really enjoyed the military, and I was a real patriot because everything the country had done for me. So I wanted to pay back, and I really wanted to join the military and fly. And I was able to do both of those. I went to the U.S. Naval Academy, and 4 years, pretty hard studies, and then I got lucky enough to get selected to go to flight training. Went down to Pensacola, Florida, and went through Navy flight training as well as advanced flight training down in Corpus Christi, Texas. And that's just what pilots do, about 2 years of training. And then I went to fly the E6 in the Navy. What's interesting about that is I didn't really initially know much about real estate, but there was one guy in flight school that I remember, and it always made an impact on me while we were all renting in apartments because we knew we'd only be there 6 months, maybe a year. This guy bought a duplex, and he lived in one, and he rented out the other side. And he told me, I'd never forget it. He says, well, the one side already pays the mortgage and all my bills, so I'm living free and clear. And then he was one of those guys where we got transferred so much in our career, you could probably expect to be transferred close to 10 times, some guys a dozen times. He kept the house everywhere he went. And I ran into him not too long ago. We both retired after 20 years. And he was sitting on a portfolio of 12 homes, free and clear. And those are all homes he always lived in. He just never sold a house. So that's great advice. If you're ever tempted to sell your house because it's a pain, really think about guys that built a lot of wealth. They'll tell you don't ever sell unless you have to. But the places I lived in, it was Oklahoma City and Texas and all these places that I thought were, they just weren't exciting places for me to buy a house. And so I did. I did buy my first house when I was stationed in Oklahoma City, actually. It was $84,000. And I look at it on Zillow, and it's funny. Just last week, it was the Zillow price on it was 108. So almost 30 years later, that sucker had appreciated only $25,000. That tells you in some markets, it just doesn't appreciate. In others, this sucker lagged inflation big time. So I'm glad I sold that house. I didn't keep that as an investment. Long story short, year 2000, I get out of the Navy. I was a Navy pilot for almost 9 years. But, for us, the big lure was always to chase the money, and going to the airlines was was where the big money was. And it was great. I really enjoyed it for 2 years. I flew at United out of San Francisco. And then 9/11 happened. Boom. I had one house, a wife, and a mortgage. And overnight, everything changed. So lost a lot of things. I had to start all over again. I had to take a job. I went to talk to some recruiters, and I got a job selling pharmaceuticals. They somehow always love military guys, ex-military guys. And it was okay. I don't want to dog the profession, but it wasn't flying. And once you're a flyer, it's really tough to ever go back to doing office work. And sales is tough too. I did pretty well, but I went, the Air Force Base nearby, Travis Air Force Base, was in my territory. And so I called there occasionally, and I'd always stop by the squadrons, and I'd ask, hey, can you guys take me in? I'd really like to come fly for the Air Force, because I just knew it might be years before I go back to the airlines. And they were like, no, you're a Navy guy. We don't take Navy guys. You guys do everything totally different. So I had no luck. But then they were like, well, what are you doing now? And I said, I sell pharmaceuticals. And they said, what are you selling? And I said, well, I sell like Celebrex and Viagra. And they were like, you sell Viagra? And mind you, this is 2000 when Viagra was brand new. And I said, yeah, I can get you all the Viagra you need. And they said, you're hired. And in like record time, they did all this paperwork to transfer my stuff over from the Navy to the Air Force. So life was good. But again, I'm 30 some years old, and I had one house. But during that time, it was such an upheaval. My first wife, she was like, I'm out of here. This guy was an airline pilot, promised me the world, and now he's selling pharmaceuticals. So she split. And I started all over again, a single guy. And I asked myself, well, shoot, where do I want to buy my one and only home? I'm gone all the time because we were flying to Iran, Iraq, and Afghanistan like every month. So we'd be home for maybe a week or two, and then we'd go on another trip over to the desert. And I always liked Tahoe. And I said, well, shoot, if I'm going to get a house, let me get it someplace that I really like. So I bought a really cute place, $300,000 up in Tahoe that overlooked the lake and was up on top of the mountain. and life was pretty good. And then I realized, well, I'm gone all the time in the desert. This house is empty. Let me put that sucker on Craigslist under vacation rentals. Airbnb wasn't around yet. VRBO was really crude. And I'll be a son of a gun, but the sucker rented out right away. So I started just whenever I wasn't there, I blocked the calendar, open it up, and started making money on it right away. And vacation rentals is what I ended up doing. And as a side hustle for 12 years, the return on it was really good. So in a $300,000 home, I could consistently make between 50 and 60,000 a year. And I got remarried, and my wife and I, we were like, well, shoot, this works so well. Why don't we just get some more? And we didn't go get them in different places. We just got them all in the same street. So whenever we were up there, it was really easy to hop from one house to another, resupply it with all the linens and paper towels and stuff like that. So we got 6 of them. About six every 6 to 8 months, we just buy another one. And the first 3 I did get mortgages on, and guys like Beau, helped me. They just I was able to show them the money I made on it, and there was no problem getting the mortgages. And then the financial crisis hit, and luckily that didn't really blow me out because the income on it was so good. Even though the homes all lost 50% of their value, I just stayed on it. I wasn't going to walk from them, and made the payments and paid them all off really aggressively. So in about 5 to 6 years, I plunked all the money from the vacation rentals into those homes, and I owed them free and clear, all of them, within 5 to 6 years. So they were just absolute fantastic money machines. And while I was flying in the Air Force, it was funny because I'd be sometimes in the cockpit and we'd pull over the plane because I'd have to take a phone call, coordinate something with the cleaners, handyman. It was stressful. But I loved it, and what I did is about 10, 12 years later, just like a guy told me once, he said, in the innkeeping business, when you're doing vacation rentals, most guys last 10 years. Your cup just runs over. You get so many, about 10% of the people are just complainers. And so your cup eventually just fills up because you've heard it all. So after 10, 12 years, my wife and I, we made a decision. We said, let's shift our assets into long-term rentals. Yeah, the return's not going to be so good, but it's going to be a lot more quiet. So we acquired about a dozen long-term rentals. Long-term single-family homes spanning from Texas, like in Austin, to Sacramento area and the East Bay here in Walnut Creek. And those have been doing great. We still have them all, and they're good producers, and but they're not exciting producers. All you're doing is when you're getting that 6 to 8% cap rate, you're just hoping that they appreciate in value, and they have. They've all doubled in value, but who knows how long that's going to go on. So we're leery to sell them because we like them. So then what I did is I said, well, I've got all this money coming in. In the meantime, I'd gone back to the airlines. I retired from the Air Force, and I had my airline job, and things were good. And so I started going to angel investor networks here in the Bay Area, and met some really fascinating people. And so another piece of advice is always try to learn from those guys that have big portfolios. You'll get a few pearls. And one of them was syndication. We'd have these companies pitch to us multifamily deals, where a company might raise $40 million and they'll acquire, 6 to 8 250 unit apartment buildings, get loans for them, leverage them, and they'll polish them up over 5 years. And they'll bring the rents up from like $950 a month to about $1,400 because they'll redo kitchens and everything. And basically, an apartment complex that might cost them $8 million, they'll sell it for $15 million in that time frame, and then return all that money back to the investors. So syndication, private equity, is what I'm focused on now. I love it because it takes absolutely no time. You get a K-1, that's a statement for your taxes, every year, and that's it. You have no liability, so you don't have the concern about what happens if somebody gets injured. What kind of insurance do I need to carry? You're just a limited partner, a passive investor, but the returns are phenomenal. So to put it in perspective, the vacation rentals earned usually about 16 to 18% cap rate, right? That's what it costs you to buy the house in whole. And I was a strange guy because I owned them free and clear. If it's $300,000 to buy the average home, and it'd make $50,000 to $60,000, there's your cap rate, around 18%. The long-term rentals, 6 to 8%. Well, a syndication, some of these companies, if you do your research, will have track records that'll show that they've returned a rate of return of around 25, 26, 27% per year over like a 30-year time frame. So absolutely phenomenal returns by just being a limited partner, limited investor. And your investments are usually 100,000 minimum, but they'll work with you if you are just getting started. So that's my story. I always loved real estate because it's the one thing that was consistent. Through losing jobs, losing the job now again, it's the one thing that's always kept me afloat, and it didn't stress us out too much. When we were younger, we loved the single family stuff, managing it all on our own because we had the energy. Now, I just don't want to do it anymore. So I tell guys, if you want to get into real estate, try your hand, get dirty, get good at fixing things yourself. Don't try to outsource things. When you outsource things, you lose money every time. Management companies will rob you blind every time there's a repair. When you could find that person on Google to get out there and fix it, and then once you have their contact, you use them for everything, you can keep controls of the costs. A management company will charge you money for themselves, and who knows what they're doing, but you just don't have control of it. So that's in a nutshell. I'll take questions. Love to help any of you guys out. My email, as you can see, is right there. If you have questions about syndication or some of these limited partnership deals, just shoot me an email. I'll be happy to tell you about some of the deals. It's a great way of life. But I also tell you about the pros and cons of owning your own vacation rentals and then owning long-term single family homes. And like you always hear, it all depends where you have them. But I'm not a big fan of my Texas one because every time there's a windstorm, I get a bill for $300-400 to replace shingles on the roof. I know that's something that I could have gone to Home Depot and knocked it out for $40. And it just chaps my hide because I know I'm not there. So I prefer having them nearby where I can always drive to them.
What about let's talk about your vacation rentals, because we have a lot of interest, because a lot of people like the idea of being able to drive to their investment and potentially using it, occasionally to go snowboarding or enjoy the lake, like if Eric's watching. So right now, like if you're buying in South Lake Tahoe, for example, I mean, right now the deals aren't as plentiful as they were years ago, obviously, but he was talking about buying a condo, but that's probably not the best idea. I would say probably buy a bungalow house as opposed to. Are you buying on the Nevada side or the California side?
Yeah, so I started buying there in 2005, and I bought all 6 on the Nevada side. I love the Nevada side. You talk about just what's happened in the last few years in South Lake Tahoe. They implemented all these restrictions on vacation rentals, just like Napa. It's almost impossible to get a vacation rental permit. And then on the California side, if your folks make too much noise, you'll get the first offense. They'll actually fine the vacation rental owner $1,000 as well as the guest $1,000. And there's a lot of friction in Tahoe between locals and vacation rental owners because the locals, of course, don't like vacation rentals, the traffic, the noise, and such. And a lot of them are nuisance complaints because they know they'll drive the guy out of business. So you're seeing a lot of stuff on the market on the California side, but I think you're taking a big risk because you don't know what's going to happen to the regulations. Even if you get a permit, who knows? They may restrict it. There's been places where they just shut it down. Not so on the Nevada side. Nevada's always been really business friendly. You talk about anything, when you give you an example, if you put a water heater in on the California side, of course, you've got to wait and schedule inspection to make sure it was done right by some city guy who might take 2 weeks to come out there. Well, can you imagine the money you're going to lose with all the renters in place that you're going to have to cancel? On the Nevada side, you don't need that. And that's just one small example. I'm a big fan of the Nevada side, and that's all I can say on that.
So these houses, are they like 3-bedroom, 2-bath, 1,200 square feet type houses?
Yeah, generally. So that was always the key. You got to have at least 3 bedrooms, 2 baths. Ideally, I've had some that were 4. And yet it will attract bigger crowds. We had a 5-bedroom and often had like 12 or 15 people. They were a little more rowdy, yes, but I'll say overall my experience was really good. So I had about 5,500 different guests come through. And I think I only had damage from 2, and the damage was minor. Popping a door handle through the sheetrock, easily fixed. It's a half-hour fix. I'll tell you this. I had the same vision. I always thought, okay, I'm going to go up there and enjoy myself, go skiing. And I always had season passes, but I can't tell you how many times my wife and I would drive up there. And on our list of to-do, we'd have to stop at Home Depot and load up with supplies. And then when we were there, even on a perfect day, we'd look around the house carefully, and we'd realize, the baseboards are scuffed up, from people bringing their rollerboards in. Oh, we need to paint this wall. We should replace this couch. And so all our days up there were always taken up by making the place feel nice and new, because in vacation rentals, if you get 1 or 2 complaints, that can really, or 1-star ratings, that'll trash your business. So you've got to be, if you want to be good, you've got to maintain that 4.9 rating on your Airbnb and VRBO. So you'll be working all the time when you're there, which is kind of a pain, because after a while you learn to.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Realize it's just a job when you go up there. So the romance of drinking wine and relaxing in your home, if you care what your home looks like and you want it to be perfect for the next guest, I can guarantee you'll be working for it.
So those properties that you're buying for 3, what are they worth today, roughly?
Yeah, probably now I'd say 500, 550. The prices in Tahoe have really come up. And this is one thing I'll tell you. When the real estate crashed in the Great Recession, Tahoe took a dive first before the rest of the country, because as soon as people sense that there's trouble or their own jobs are in jeopardy, they're going to unload their vacation rentals or their second homes. And then also, once the recovery is in full swing and they buy their primary residence again somewhere, it's going to take them a couple of years before they start having excess money to say, hey, let's go get a vacation home. And then there's a surge about 4 or 5 years later. So right now, we're really in that top of the wave. Everyone who's been feeling good for the last 5, 6 years has been buying homes up there. And that's why the prices have really, really come up. I have no doubt if we do come into a recession, which will happen at some point. I can't tell you when. I'd say we're in the 7th inning. The Tahoe prices will take a hit. But like I said, don't let that discourage you, because if you look at the numbers and you get a vacation rental and you run it well, you'll be able to weather that out. Ride that out, no problem. Because the returns on it being about 3 times as much as a long-term rental, you'll survive, you'll make your payments, and I encourage you to pay it off. So that way, no matter what happens, you own it free and clear. That's just been always my policy.
So on average, they're making 50 to 60,000 a year. And then what's kind of a rule of thumb, like to figure expenses and turnaround and everything? Like, would you say 50% expense ratio on your gross income, or is it more like 30 if you're managing yourself?
No, I always kept mine at 10%. So I figured, give you an example, a 3-bedroom, 2-bath. If you're paying the utilities and taxes, but here, giving it one little pearl. In where I'm at in Nevada, I still kept my favorite one. I bought it for, I think, $250. My taxes on it are $790 a year. Okay, on that same one on the California side is probably going to be closer to $4,000. Put in all the other fees on the California side, yeah, you're going to probably have about 20% expenses. Besides paying the utility bills, your expenses really are just paper towels and freshening up linens and occasionally getting a new piece of furniture. But I found I average it out to be about $5,000 5 to 6,000 per year. So by keeping costs low and doing all the maintenance myself, 10% was the operating expense, 90% was pure net income.
So how do you handle the turnover, or when somebody's there for 3 days, now you got to send in a cleaner? Is that all kind of automated now? Do they get notified, the cleaner, or how do you?
Yeah. So no, it's still old school. I send them a calendar, and it's pretty dynamic because you might have some cancellations, but generally a month at this time a month, I'll send them the September schedule. And finding good cleaners it took time. You're gonna go through some really rotten cleaners that don't show up or do a crappy job, and that's going to lead to phone calls from angry guests. That's just part of the game. Prepare yourself for that. Once you find a really good cleaner, I found it pays to pay them well. Send them a nice holiday gift, because that way they're always on the top of your priority list. But yeah, like I said, I could be in a tent in Afghanistan on a satellite phone, and I could say, hey, we got a turnaround tomorrow. These guys are checking out early, and I got another group that's coming in a day early. I found it's just best to call or text, make sure they got it. I always remind them the day before, hey, we got a quick turn tomorrow. That means 11 o'clock is checkout, 3 p.m. is the check-in. So they got 4 hours to knock it out. But a lot of them, are working many vacation rentals. So they'll squeeze you in, but they're good. A lot of them have got the system down where they'll strip the beds. They bring the linens in that you already provided, put them on the bed. They don't even use your washer and dryer.
Cool. We got a question here, and whoever asks this question, you have to opt into StreamYard so we can actually see your face, but you could just let us know who you are. Curious what you think of property management during COVID. My plan is to fire them post-COVID because they charge way too much for repair. Yeah. Larry manages his own property, at least in Tahoe and in the East Bay. Probably in Texas. I'm not sure if he manages his own, but his model is different than a lot of people, where he said it earlier on today that he saves a ton of money by doing it himself. And I think especially when you're starting out too, right? Like, it's probably more important now, more so. Larry's way down the evolution of real estate investing, where he could outsource it if he wanted to, but he prefers to do it and keep costs low.
Yeah, I tell guys this: property management, you're still going to get a call. You might not get the call at midnight, but you're going to get the call the next morning, and then you're going to wonder all day long. I wonder who they're sending out there. How much they're going to charge me? Because basically, you're giving them a blank check to fix whatever needs fixing, without having competitive quotes. They'll use their guys. I'm convinced most of them will get some kind of kickback from it too. And I just don't like it, because these days, really, if I wanted to, the Texas one I've just kept under property management because I started with them. Texas is pretty reasonable. They charge 7% instead of 10%. I can handle that. But, I know if there's something silly like a light bulb in the entryway that's burned out, a lot of times property managers, they'll send the guy out there. Well, by the time he goes, finds out the right kind of bulb to put in, and it's a $150 bill. Can you imagine if you just had a guy that was nearby, a neighbor or somebody that you said kept on retainer, and just said, hey, if I need you to check on something, how much is that going to cost? You can get that cost down to 20 or 30 bucks. So try it yourself. And if it absolutely fails, then go ahead and go to a management company. And I'll tell you this, my parents have rentals as well, and they have it all through a management agency. And I can't tell, because they're old, they don't want to deal with it. I can't tell you how many poor renters they've had in their long-term rentals because they didn't vet them themselves. I can go in when I have an open house, on a Saturday and a Sunday, I'll have 30 people walk through. Well, my wife and I will see every one of them. We'll see what their car looks like. The car's a pigsty. I don't care what the credit rating is. I'm not taking them as a renter. And then I can run their credit. Nowadays, all the stuff's online through different things like, rentscreener.com will throw out criminal history, their payment history, their credit score, and they pay for it because they want to rent from you. I take my top 3 guys, and I'll only take guys that have $780 points as a credit score. And even during COVID, I haven't had one missed payment because these people, their credit score is gold to them. They've done so much work to have that high credit. There's no way they're going to default on a payment and ruin their credit score.
Yeah, that's sharp too, and that's also goes to show like you're buying in a little bit more affluent areas, right? So you're able to screen and get a higher, quality versus people that are buying C minus type properties in different markets. You're going to deal with a different tenant base.
Exactly. Give you an example. If you look for really, really cheap stuff, your best returns on investment will be places like Syracuse or Buffalo, New York. You can get fourplexes up there for 150 grand. Each unit will rent for close to $900. It's a terrific rate of return. But if you look at the hassle and the number of turnovers and how many times you'll have a vacant unit and the damage and the trash, it's unreal. As soon, I do liken it to a step ladder. Those bottom rungs are just people that are really amateur renters. They don't take care of stuff. As soon as you get probably, I'd say in the $1,500 to $2,000 a month range, you're going to have much less of a problem. And as soon as you're in the above 2,000 a month rent, if you're going to get class act renters, and especially when they come with a perfect credit score, you got nothing to worry about. Never ever have I had a problem with any of those renters.
I think, yeah, I think. Oh, we're getting a little feedback. But anyways, I like the idea of vacation rentals because you can own less doors and get the same amount of cash flow. Like one vacation rentals like having 2 or 3 long-term rentals.
Exactly.
So you could acquire far less doors and pay those down quickly, and then you could easily live off of just those 6 rentals alone and have a great life, right? Like you don't need those other 12 or 15 rentals, right?
Yeah.
So, and now let's talk about the multifamily syndications and maybe not just multifamily. What, as a limited partner, what have you invested on in asset classes besides multifamily?
So the investor group that I belong to, it's like a Shark Tank. We get pitched every month 5 companies that go through a deal screening process, and the best 5 will pitch to us, and we'll meet in the East Bay or San Francisco, or we also have a South Bay chapter, and it's really fascinating because it runs the whole gamut. Now, generally, you'll have divided into there's multifamily guys, established companies. So I've invested in those, and that they've done the same thing for 30 years. They just buy a portfolio of usually 6 to 8 large apartment complexes and clean them up, polish them, and then the goal is always in 5 to 7 year return frame. They dissolve the fund. When the last property sold, everyone gets their money back, and then the equity share of the profits. But you also get a preferred return every year based on the cash flow that the properties produce. Then you'll have other things like I invested in a company out of New York, and they own a portfolio of, I think, close to 80 Hilton Garden Inns and Courtyard Marriotts, and they've done really well. Now they're obviously really hurting. So that wasn't expected. I have a feeling our returns are going to take a hit on that. However, big companies like that, they're also pretty savvy in terms of they'll get forbearance and some relief from their big lenders, because when they're taking loans, in the $50 to $100 million range, it's in no one's interest to foreclose on them. And then the third, I would say, is specialty guys like, assisted living, dementia care. There's companies that specialize in just purchasing those. And again, the whole model is not just to have them as a cash flow, because that cash flow is decent, but to always fix them up. They take the ugly ducklings, the ones that were poorly managed, and they'll really do a nice retrofit on all the common areas, the rooms, and they'll just increase it, make it from a average to a really well-run old folks home. What do you call it? Nursing home, dementia care. And then when they sell it, they'll sell it at a tremendous capital gain. And so that's all given back to you again. It's long-term capital gains. You're going to pay less taxes on it. And then there's other ones, like I just recently invested in a self-storage company out of Georgia, and they own like 22 self-storage places. And they're always pitching to angel investor groups because they want to buy more, and they find, again, the good deal, underutilized ones that have extra space, so they can go ahead and build it out and then add some more. A lot of them, their plan is always to add 100 to 200 self-storage units on the existing property and really bring the cash flow in, and then turn around and sell it again once it's really humming along. And they just do that again and again because that's all they do. So it's a terrific way to invest. I'm absolutely convinced. Had I done it from the beginning as a 35-year-old and just whenever I had 100 grand, just plunked it into one of those investments, I would have actually made far more money than I did. I wouldn't have a great story to tell because, it's just, well, frankly, it's what really successful rich families have always done. They don't get their hands dirty by managing their own stuff. They just do syndication. They just become limited partners or general partners in big outfits that do this. I've stayed away from commercial real estate. One, I thought it was frothy, and commercial real estate obviously now has taken a huge hit. It will come back, but there's companies that'll pitch on. They'll own 150 Starbucks locations that Starbucks is renting from them, and they'll have a lot of turnover. Nail salons, they'll come and go. They'll have every time I drive by a strip mall somewhere, I'll see vacancy signs from the agency that's managing it. So I think they're having tough times. I love the idea of where people need to always have a roof over their head. So investing in new construction for single family homes or the multis, I think is the way to go.
I like that. Yeah, it's interesting times right now. It's I reading some interesting stats and just even in like the restaurant business, how many restaurants will actually go out of business and are already out of business. And then, like retail, what's going to happen there with a lot of retail spaces, and then the transition of people working from home, because quite honestly, I think it's easy to adapt. I actually don't mind. I love working out of the house because I can be way more productive. Um, but it's definitely, everything's shifting right now, and COVID might be around for another 18, 24 months. We don't know. And life is different. You got to wear a mask everywhere. What's your take on what's gonna, you think we're not quite in the recession yet? You think we're gonna hit it probably in the next 6 months or so?
No, I actually don't. I'm pretty positive outlook on that. When you look at the stock market, the reason it's returned almost to its pre-levels is it's always forward-looking, right? 6 to 12 months. They know that we'll eventually lick this. There's no doubt. I think we're going to have a vaccine by December or the spring. Well, as soon as that news comes out, the market's going to explode, right? Because now it's just a matter of how long to get it out there and distribute it to everyone. But I really do think long term, you have to think long term. Don't let these things paralyze you into investing. There's so much cash right now that's sitting on the sidelines and people are not investing it. I do believe you should have your emergency fund, but the rest of your money should always be fully invested. It's absolutely foolish to be sitting on cash because timing the market doesn't work. We've seen this again and again. You look at all the Wall Street guys, that all they get paid for is to look at the crystal ball and play the market. And consistently, they underperform the index. If you just buy the S&P 500 index and write it out, your portion of your portfolio that it isn't real estate. And I think a good mix really is 50-50. I've always had about 50% in the market, and I never sell stock. I just buy and hold. But I've always bought not individual stocks. I've always just bought the index. That way I don't sit up at night wondering, did I make the right decision or not? I'm buying the whole market. And I'm positive on this. I think real estate wise, I think there's going to be great opportunities in this too. I mean, the things that are suffering right now are going to do really well for bargain hunters that are going to find really good deals.
They'll be repurposing and different things. I mean, even with what's happening, these ghost kitchens that are popping up where they're taking a warehouse and they're putting 7 different kitchens in, and then there's grub hubs and things that go. I mean, there's always disruption, and now with technology, things move at such a fast pace. But at the end of the day, history is never wrong, right? You got to own real estate long term, and that's the way to create wealth. And even if you're buying your first home and you're able to, buy a duplex, right, and live in one side, live it, rent out the other side. Maybe you can get an FHA loan, or maybe you're in the military, you can get a VA loan, 100% financing, right, and like you can rent out the other side and live for free, and then take your money and invest in other real estate. There's a lot of ways to do it. I think a lot of people, just need to kind of like start, right, and maybe it's starting with a house hack and living in one side, but if you don't start, you're never going to get to, that financial freedom that
Yeah.
everybody's chasing.
Yeah, just execute and do it. So many times when I look back on it, had I been scared, there was a guy I flew with, a real pragmatic thinker. He was always talking about Tahoe before I got my first place, but he was already so far ahead. He was talking about, well, I got to talk to an attorney, and I think about doing a limited liability corporation, and then I was like, dude, this sounds so convoluted. Just I just went and got one, and I had 6 of them before he even went and executed, because he overthought everything. He was already thinking about, lawsuits and all that. And so, again, don't let that paralyze you. There's an interesting anecdote, actually. I did talk to an attorney once, because I did think about, well, maybe with 6, I should put them into LLCs and all that to protect myself. But an attorney in Reno actually said, you know what, you're overthinking it. So relationships drive lawsuits. He says there's hardly ever lawsuits in vacation rentals, because even if they've had a crappy time and didn't enjoy their time, by Monday or the next week, they're back in at work. They've already forgotten about you. What's the only lawsuits he sees in real estate are long-term relationships, right? And those are, if you have a renter in your home, for 10 or 15 years, it doesn't take a genius. They've done the math on a napkin, and they've realized, wait a minute, I've already paid this guy's whole home off. And now, if they're rotten, it's payback time, and they'll come up with some kind of a way to get even. I mean, I think it happens rarely anyway. It's way overblown. We hear these cases, but they happen on such a small scale. Again, don't let that paralyze you. And especially at the beginning in your life, when you don't have a great, huge net worth, you don't have to worry about it. Nobody's going to sue you. There's nothing to sue. I mean, that's just a fact. I got a kid that's 20 years old, and he's already worried about, well, Dad, what should I do? Because we're trying to get his first house. And I said, you're golden. You have no net worth, and you're going to have a big mortgage on it. As soon as they go run to a lawyer, if they would, you're going to have your $1 million liability. That's part of your regular policy. That's going to cost you $600-700 a year. But other than that, you don't need to worry about it. There's nothing to come after.
Yeah, I think people overthink things often. Do you own properties in Zephyr Cove? Somebody wants to know. Is that an area you?
Yeah. So mine are up in State Line. I do like the South Shore. Now, granted, my friends up on the North Shore are a little snobby, and the North Shore is prettier. It's more quiet and all that. Incline Village is delightful, but the problem is I managed a bunch for friends too, because I was doing so many vacation rentals of my own that my friends that had homes up there just said, there were guys that didn't want to get their hands dirty, said, hey, can you just take over mine and just get take a cut or whatever. And I just took 25%. And it was interesting, because I managed them from Tahoe City through Incline on the North Shore. They always made less money than the South Shore. And it's because your average guy that's going to Tahoe, it's about 50% of them have never been, right? So they just want to go to the loud casinos and the blinking lights and all that stuff on the South Shore. And the North Shore doesn't have that. I don't go in those casinos ever, but the thing is, my renters love going there. So South Shore is my personal favorite. Although, I think it runs the whole gamut. There's definitely a slice of people that want the more high class things. I'll say one quick thing. I bought homes that ranged from $250 was the cheapest to, I think, $450 was my most expensive. They all returned the exact same amount of money. So it's kind of funny, because I would always kick myself and say, why did I get that one for $450? It's not like it doubled the income. I didn't make $120 on it. It was still around $60, maybe a couple grand more, but frankly, it was more headaches because you had bigger groups. The ideal one is your 3-bedroom, 2-bath. And Zephyr Cove is terrific. I love Zephyr Cove. I think that's really nice too. Short drive to the casinos. You can't go wrong. We look at anything up there.
Yeah, a couple last couple questions. One is, what's your 5-year plan from now? Where do you see yourself in 5 years? What do you want to do? And just are you going to keep your properties? You're going to ever 1031 exchange them? What are you going to stick with the angel investing, syndication stuff? Where do you see yourself 5 years from now?
Yeah, I think I hate selling stuff. You and I talked about that. Every home you sell, you always see the price go up, and then you're mad about it. I would say as each one matures, I probably will get rid of it. And I think by the time, I'm 51 now, I'd say by 55, 56, I want to be all in syndication and just not worry about a phone call anymore. I deserve it at that point. I've made enough money on it. But work it. I always tell guys, work rentals actively for 10 to 15 years. And then once you've done it and it can be a pain, then go shift into other stuff. But for those guys who are just starting and want to do something where, hey, just really hands off, jump into syndication.
Great. And what are your hobbies? What do you do when you're not working or working on houses?
Well, I've got a kid. I got a 6-year-old. So right now my hobby is doing the homeschooling, and we go walking every day. I love working out. Really, my hobby was also my job. I loved flying. It's a real shame that we're all sitting at home. I did some of the best flying on the 787, going to Shanghai and Korea and Australia, and that's just evaporated. But it'll come back.
So you're gonna fly for the next foreseeable future as soon as it comes back?
Yeah, I'll fly till 65. There's no way I'm gonna not give up flying, because flying to me was like a vacation. I gotta shift around here real quick because my batteries are running low. But let me keep asking questions if you got one.
Sure. Now you're working on a project, or you're raising money for a multifamily syndication right now, right? And where, can you give us a kind of rough spec of that project, where it is? Is it a value add play, or is it a ground up deal?
Yeah. So after doing 6 of these investments, one of the developers approached me and said, "Hey, Larry, you got a lot of contacts. If you're interested, why don't you raise capital for me?" They're developing 17 single-family homes in the LA market, and that market is really solid. That's my girl. I see her.
Hello.
So this deal caught my attention, and I'm investing in it personally, just like my regular investors on the same terms. Doing 17 single family homes. They're small lot homes, 2,000 some square feet. And what's interesting about this deal is they need $3 million to raise. We're about halfway there, so we're going to finish it up. And then they'll get a bank loan from First Republic for $9 million, and they'll start construction here, hopefully end of August or beginning of September. It's a 2-year turnaround. They'll have the first one done in 18 months and the last one at 24 months. They'll sell them all. It's a 33.5% return if they sell them at $950,000 each. Now, what's interesting is I've been looking at the comps, and the sponsor, the guy that put this deal together, keeps sending me the closing comps on it. And for the last month, these same exact properties have been selling for $1.2 million. So the return for somebody to invest is probably going to be more on the order of 50%. Great deal for a 2-year thing, and great deal for syndication, for first-time syndicators, because if you start, you might not want to lock up your money for 5 to 7 years. Do a 24-month deal. Everyone gets cashed out at that point, gets their full participation back, and then the equity share. 24-month deals don't come around too much. Most of them are 5 to 7 years.
Were they building those houses?
This is in LA. And so, LA and Costa Mesa are one of the 2 areas that allow this, where they take a, something that's like maybe an acre and a half that had 2 or 3 bigger homes on it, and they are able to space 17 really nice looking homes in there. And this guy is fully permanent and ready to build. He's done about 30 of these before, so he's a well-established builder. Track record is something you want to look at. How long has the guy been doing it? And if he can show you that he's never had a deal go sour and never had people out of the money, that's gold. It's as good as it gets. I'll tell you, a lot of these syndicators are so prideful of their track record. The guy, for example, I invested in that has the Courtyard Marriott, during the Great Recession, his fund was hit hard, And when they sold the last property, they were going to be at a deficit. So let's say you put in 100 grand, you're probably going to get like 95,000 back. And he was so cognizant of not wanting to have a deal. He put 5 million of his own money in to make it whole. And that was the first time in 14 funds that he ever had a return that was zero, but everyone got their money out. So it's pretty rare for established guys to ever see somebody losing money.
We'll see whenever there's a major, downturn, like in 2007, 8, 9. I mean, things do happen, and I think there are a lot of fly-by-night people that, are in syndication, right? Because not everybody's vetted, but that's why you have to do your homework. And track record's a huge thing, right? Is it their first deal? You got to be a little bit more tentative.
Yeah. Oh, for sure, right. And you want to, on deals like this, I can, for example, just send you guys a PDF, and it'll show the 17 pages of the project, but it'll show their track record of every project they've done in the past and what everyone got paid out on. And, these returns will show you that they're all like the worst one's been like 15% a year return. And, the best probably around 28%. So it's very tough to find those kinds of returns in the market. And if you want to balance your portfolio and keep money in stocks, I think it's smart to go ahead and put some of your money into real estate. While you might not want to buy a house and do all that work yourself, put it into syndicated. Any of you guys, just shoot me an email right there, LarryCSuter@gmail.com. I'll happy to talk to you about anything, whether it's vacation rentals, long-term rentals, or just private equity syndication. It's all good.
Cool. Well, we really appreciate your time, and hopefully we do a Shark Tank, an REI Shark Tank that we
for sure.
About.
Thanks, Beau. Thanks, everyone. Talk to you soon.
Okay.
Bye-bye.
Bye.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.